Morning, everyone. We will get started in just a minute with the State Small Business Credit Initiative webinar with the Minnesota Center for Employee Ownership and the Minnesota Department of Economic Development. And Darren, did you hear the recording start? Did it tell you that it was recording? All right,
yes.
Good. Well, welcome everybody. We will get started here in just a second. A few housekeeping items. We did not start this as a webinar, so you have the ability to unmute yourself. But for now, if you would just mute yourself, I would appreciate it. And then at the end of the presentation, we will do live questions. You certainly can just turn your mic on and ask the question, but as long as as we go along, if you'd like to ask a question as we go, please use the chat function. If we can answer them by typing, we will, or we may stop the presentation to answer those questions if it's timely. So again, use the chat for now for your questions. I am Steve Storkin, one of the board members for the Minnesota Center for Employee Ownership. Thank you for joining us today to learn more about the State Small Business Credit Initiative and the programs that are happening in Minnesota. I'm going to spend about 2 or 3 minutes just telling you a little bit about the Minnesota Center for Employee Ownership, if you don't know, and then I'm going to turn it over to Drew Lindorfer from the Department of Economic Development to explain to you how SSBCI works. So with that, let's get started. The Minnesota Center for Employee Ownership is a 501c3 nonprofit organization. We are the unbiased hub for education and technical assistant resources on all forms of employee ownership. We believe that employee ownership is a critical tool in helping to reduce income and wealth disparity and create more vibrant and participatory economies in Minnesota. You can find out more information about us on the website, mnceo.org. And you can get in touch with our executive director, Kirsten Kennedy. You see her email address there. Serving as the outreach and education hub, this is how it happens in a two-step process. First, we act as that center for outreach. We do outreach in any place that we can get an audience. For example, webinars like today, meetings with chambers of commerce with their members, business advisors, economic development leaders in their region, any place and every place that we can get an audience that would like to hear about employee ownership as an exit planning tool or a business growth tool. That's where we spend our time as a nonprofit organization. And then our ultimate goal is to get in front of business owners to connect them with the resources that they need to learn more detailed information about employee ownership. So maybe they're asking about what their company is worth. We'll connect them with business appraisers. Maybe they need help with their accounting. Maybe they need a business coach. You can see all of the different technical resources that we have available to help future employee-owned companies learn more about employee ownership. And how do we do that? As I said, we do that in front of audiences, any place and anywhere we can get an audience. And the reason I mention this is that we need your help. Many of the companies on this call today are employee-owned companies already. And the way that we share the power of employee ownership is by having you help us tell your story at all sorts of different places. You can see we've done these at chambers of commerce. We've done them at CPA firms. We've done them with economic development regions. We need your story to help others think about employee ownership and give them the great word about what it's done for your company, what it's done for your employees, your business owners. So I put that out there as an advertisement. Please contact us. We're always looking for stories to tell. We're always looking for presenters. We can't do it without your support. So that is my 3-second commercial for the Minnesota Center and why we need your help. Let's talk about why we are here today. Why does the Minnesota Center care about the State Small Business Credit Initiative? We feel that expansion of employee ownership can happen in 4 different ways. 1, the conversion of an established business into an employee-owned company. 2, the creation of a startup business as a worker cooperative. 3, acquisition of a business by an employee-owned company. And 4, the expansion or growth of a current employee-owned company. The two in red are the ones that SSBCI, prior to about a week ago, the two that we knew SSBCI could be used for. There is a third use that we'll get into here, this acquisition of a business. We just got confirmation that is also an authorized use. So today we're trying to focus on making sure that you as employee-owned companies know that this opportunity is available, know that there's capital available through the state program from federal dollars, in hopes that you're going to have the opportunity to grow your business, to use this capital in addition to capital you already have available to grow your business and create new jobs and new employee owners. We would like to make sure that the Treasury Department knows that after getting employee ownership as an authorized use, we want to make sure that the Treasury Department knows that it is being used. And so we would ask that if you take part in any of these SSBCI programs, we would ask that you just contact us at the Minnesota Center and let us know that you either applied or you applied and you were successful and you're using this capital and how you're using it. We'd love to share your stories, even if it's anonymously. We'd just love to share with the Treasury Department that there was a manufacturing company in Minnesota that has 75 employees and they received a loan for $800,000 to do XYZ. It doesn't have to be, anything where we give your name and put a story out on the web unless you want us to. Again, back to the storytelling. But we really want the Treasury Department to know that this is being used. There currently is not a reporting process that says where Drew can say, hey, in Minnesota, we did this many loans and 10 of them were for employee-owned companies. Currently, that doesn't exist. So we'd really like for you to share that information with us. So without further ado, I would like to introduce Drew Lindorfer, the manager of the SSBCI unit at the Minnesota Employment and Economic Development Department.
Thanks, Steve. I am going to just talk a little bit broadly about SSBCI as an overview, and then a few of the programs that are probably most relevant to employee-owned companies. So you'll see this referred to as SSBCI 2.0. These were funds that were a program that was basically reauthorized under the American Recovery Plan Act. So the federal funds are being managed by the U.S. Department of the Treasury. Minnesota was awarded $97 million under this formula that they had for all of the states and territories. It's based on the job loss during COVID, in case anyone's curious about that. We will be getting funds in 3 disbursements. So we have the first one of those right now and are starting to roll out some programs. We also expect to be getting an additional grant for technical assistance for a little under $2 million, but details on that are not available yet, as we are still waiting to hear back from Treasury about our application for that. As part of that $97 million, there are specific dollar amounts that are set aside for businesses that qualify as being owned by socially and economically disadvantaged individuals, which encompasses a good number of groups, including women, veteran, people of color, long-term rural residents, and then folks who are doing business or living in CDFI investment areas, and then also very small businesses, which are those with fewer than 10 employees, probably less applicable to the folks on this call, but that's one of our set-asides. Thing to keep in mind for all SSBCI programs is that the funds must cause and result in private financing. So it's a tool a lot of the time for when gap financing is required. And that's mostly what we'll talk about here. So either gap or some offset due to credit requirements of a private lender. Overall, Treasury is expecting us to get a 10-to-1 private leverage ratio, but that's over the whole program, and some of the programs are a little bit different than others. On that front, the minimum is a 1-to-1 match. So since this is Minnesota-specific money, there are some characteristics that all the businesses have to have, including that the funds are being used for a location that is in Minnesota. The overall preference is for companies with fewer than 500 employees, but there are exceptions to go up to 750. Treasury has outlined eligible business purposes for all of these funds. They are fairly broad and have exclusions such as passive real estate and company ownership, things that would be illegal at a federal level, as you might expect. And I'll talk a little bit more about how employee-owned companies sort of have a little bit of a carve-out in just a second here. One of the federal requirements is that they have certifications that are required from borrowers, and if there are intermediary lenders involved, then also from the lenders about the use of proceeds, any conflicts of interest, and a requirement that the company certify that no principal has been convicted of a sex offense against a minor. And I talked a little bit about SETI-owned businesses already, but there's a little bit more on that. And Steve's going to update you guys on some information we got about how employee-owned companies qualify under SETI in a second here. So like I mentioned, generally it is prohibited that SSBCI funds be used to purchase an ownership interest in the funds.
I think we lost Drew. Darren, do you have Drew as being frozen?
Can you guys,
Yeah.
am I back yet?
There we go.
Yeah.
Okay,
Sorry,
you want to back up, Drew?
My VPN blips out every once in a while, and then I don't know what's going on. Sorry. I don't know how much of the slide you heard.
Right, it started right at the beginning of this slide. So if you start this slide over again, that'd be great.
Sorry about that. So as I mentioned before, there's a general prohibition against using SSBCI funds to purchase an ownership interest in a company. There is a carve out for employee-owned companies. So you can see the exceptions there, the type of employee ownership that they look at. So ESOPs, worker cooperatives, and employee ownership trust. And generally speaking, the ownership interest then is allowable if you are going to end up with a transaction where broad-based employee ownership is the result at the end of the transaction. I'm going to let Steve chat a little bit more about this, as he's had some recent updates from Treasury about additional allowable things and some SETI qualifications too.
So this carve out was created by a lot of work behind the scenes with the employee ownership community. It came as a mandate from Congress. But the original intent was that this SSBCI program was going to be used, and still is the intent of the SSBCI program from an employee ownership standpoint, to create new employee-owned companies, to use this funding for the smaller end businesses that are either ESOPable, worker cooperatives, employee ownership trusts, any of those businesses who have a gap in financing, to use the SSBCI opportunity to create more employee-owned companies by bringing capital to the table. So that is what this carve out is for. But what we found out and what we've tried to get from Treasury is, but what if an employee-owned company, someone like one of your companies on the call today, is employee-owned already, and you want to use these dollars to purchase another company and make them majority owned by your ESOP or by your worker cooperative? Is that allowable? We just received answers back from Treasury last week, and they said yes. They did some research. They think it qualifies under all of the exceptions. So not only can these dollars be used for the creation of new employee-owned companies, but you as an employee-owned company could use these dollars, use this program to help you purchase a company, a majority interest in employee-owned company, a majority interest in any company, even though they're not employee-owned now. So that was all they wanted to make sure everybody knew, was that it has to result in the company that you buy being majority owned by your ESOP. As far as SETI-owned businesses go, Drew, I guess what I wanted to say is that we still don't have any sort of ruling. We don't think that, if you're trying to qualify as a SETI-owned business, we don't currently have any indication that you can look through the ESOP to say, well, 90% of our ESOP participants qualify under that definition. They're women, they're veterans, they're people of color, or they live in an area that's considered I don't want to call it depressed area, but a CDFI lending area, they say. Currently, there is no look through to the ESOP. But again, don't get caught up on SETI. that is just a carve out, right, Drew? This is just money that you set aside that said, okay, we can only use these dollars for SETI businesses. The rest of it is across the state, any business.
And regardless of the structure of the business, if the business is located in the CDFI investment area, they'll qualify as SETI. That's one of the buckets that those dollars can go to.
And then I guess the last thing I'll say is, regardless of what this slide says, that you're buying a company, acquiring one, we're creating new ones. What we really want to focus on in the next slides is nothing to do with that. The next couple of slides in the programs that Drew is going to talk about are simply you having access to capital in addition to private financing to help grow your business. That's really what we want to focus on.
So under SSBCI 2.0, we all of the states and territories proposed different programs to Treasury. And so these are the 6 approved programs that we have. I'm going to talk about the first 3 today. The last 3 are equity or hybrid programs that are really focused more on startups. And so if folks have questions specific to that, I'm happy to answer questions offline or at the end of this, but we'll run through those first 3, and that's just the dollars allocated there next to those. So the Minnesota Loan Guarantee Program is providing an 80% guarantee up to $800,000 on loans from enrolled lenders. There's a quarter-point enrollment fee, which is waived if the loan term is less than a year or if it is a SETI-owned business. Generally speaking, term loans and lines of credit are allowed, although there's a time limit on the lines of credit. And in general, we do not restrict the purpose or the industry that would qualify under this program. There may be restrictions from enrolled lenders. This is one of our intermediary programs. And on the next slide, I can talk about who those lenders are. So right now we have 30 enrolled bank and CDFI lenders. If folks don't know what CDFIs are, they're community development financial institutions, which tend to work with businesses either on a gap financing basis for needs they have that their bank can't assist with, or if they have other credit challenges, other reasons that traditional financing is not a good option for them. The vast majority of them, the ones we're working with specific to this program, are nonprofit loan funds. And they tend to provide technical assistance along with their lending services. So for this program, the businesses are applying directly with the enrolled lenders. We are this week posting a directory of the ones that are enrolled to date. And then I think we have about 10 more we're looking at approving. So that will continue to get updated. The lenders are using their own underwriting process and guidelines. And so typically when you're going to see this program used is if there is some sort of a collateral shortfall, some sort of other credit-based need that doesn't make it quite meet the standards of the lending institution, but with this guarantee, they're willing to make the transaction. So it's not a true gap financing, but it's sort of a gap in that credit risk. And so the lenders are going to submit paperwork to us regarding the loan. We will approve it, do the guarantee paperwork, and then they can close the loan. That's how that one works. The Small Business Participation or Loan Participation Program is our other intermediary lender. This one is just working with CDFIs. We do not have lenders for this one yet. It went through an RFP process, and hopefully we will be announcing that at the end of this month, who the lenders are that at least are enrolled for the first round here. So this is a purchase participation program. We will be, the lenders will be reviewing loans, again, their own underwriting criteria, and Deed will purchase 25% of that loan or 30% if it is SETI owned. Our total purchase participation can be up to $250,000. Same thing with guarantee, term loans and lines of credit are allowed with some restrictions on the lines, and we are neutral as to the purpose and industry as long as they're meeting the lender's requirements and the SSBCI requirements. So different lenders may have different focus areas and things like that. these loans, same as the guarantee, are available on a first come, first served basis. And as I mentioned, we're looking at the lender applications right now. Businesses, same thing as with guarantee, are going to apply directly with the enrolled lenders. They will do their underwriting. We will be getting the transaction paperwork for those and making sure it meets deeds risk criteria, and then enrolling that loan. Again, they'll close after the deed approval. For both of these programs, the borrower relationship continues to be with the lender. And then the last program I'll talk about works a little bit differently than those two, although I see there's a question in the chat, so let me see if I can. There, I just think I just answered that. So yeah, the relationships between the borrower has a relationship with the lender has a relationship with deed. So that's how that will work. Hopefully that answers the question. If not, hop off the mic at the end of this and we'll get to it. So the last one is also considered a participation program by Treasury. It's an automation loan participation program. This one is not structured as a purchase participation. It is structured as a companion loan. Typically is going to be to bank financing. It is narrower than allowable by SSBCI rules. So we are only looking at companies that are in the manufacturing, distribution, technology, and warehousing space. And the loan purpose has to be used for equipment or related software that is specifically in an automation area. So it has to be increasing productivity and automation. For those of you that are familiar with the automation training incentive program that DEED runs, we are following the same automation definitions as that. That program potentially could be used by folks after they get some of this automation equipment in place. There are some geographic restrictions, I believe, that you have to be in greater Minnesota to qualify for that one. So this one, again, like all SSBCI, requires a private 1-to-1 match. We prefer a 5-to-1. It really was formed as a supplement to the Minnesota Investment Fund, which assists expanding businesses primarily in the manufacturing space, but is tied to job creation goals, and there are no specific job creation requirements for this program. And I think I have my terms on the next page here. So this one is, the application is made jointly by the business and the bank that you're working with. If you don't have a banking partner, but you know that you're gearing up to do some automation build out, we can give you some more information ahead of time, but we won't be able to do the final processing until we know where that private financing is coming from. Our loans can go up to $500,000. They'd be on a 5 to 7 year term. Typically, we'll be following the bank's term. It's at a 1% interest rate, which would be different than the bank's terms. Our expectation is that the bank is using market rate. And then
I'm sorry.
That's okay. I'll just riff for a second here.
Hang on one second here. I have no idea how that happened.
Sometimes, stuff just happens. We can defer payments for 6 to 12 months, and that is really just an acknowledgement about sort of lead times on actually ordering equipment, getting it installed, till you're hitting closer to cash flow on that. And then the other thing that's been attractive to the banks in getting them to sort of partner with us on these is that we can subordinate to the private sector financing, but we are still requiring guarantees and collateral. So those are the 3 programs I was going to highlight today. And in general, all SSBCI questions, there's an email address on the last slide here. And that just goes to our whole team, so we can just generally respond to anything out of that box. And if y'all have questions, I am happy to take them on any of those or on the other programs that I didn't talk about today.
John, can I ask you a question? I'll let everybody kind of think about their questions. You can put them in chat or, unmute yourself for a second. But let me just throw 2 scenarios at you. So I'm a manufacturing company. I'm looking at this automation loan participation. I've been looking at this machine that I know will just, it's going to change the way we do business for one of our product lines. I'm going to be able to take, let's just say I'm going to be able to take 7 to 10 employees per shift and, maybe 5 to 7, move them to a different part of the company, maybe create a new product. I mean, it's going to be a game changer for me, but I just haven't been able to find the funds right now. And let's say it's a $3 million machine that I need to purchase. Tell me more about how this works. I go to my lender and I say, look, there's this new SSBCI program I heard about. I think I can get a loan for 500 from the state. Can you help me do this? Can you help me walk through that process as a manufacturer, what I would do and what the terms would look like? Does that mean I get 2.5 million from my lender? Just kind of help me understand this.
So this really is a gap financing tool. It's sort of an acknowledgement that sometimes these sorts of equipment don't have the loan to value ratio that banks are looking for. Typically, manufacturers do have banking partners that they are used to working with on their equipment finance. So unlike the other two programs I talked about, there's no lender enrollment process for this. It's on a transaction by transaction basis that we're looking at the lenders. But we'd want you to have had some sort of a conversation with your banker, because there is a requirement that there's a gap need there. Yeah, otherwise everyone would just come in for the maximum amount, and we really need to have some justification for why the public funds are required to supplement that private financing, bring in that private financing. I actually did very recently have a conversation with somebody looking at a $3 million transaction, and that the bank was willing to do 2.5 million on it and needed some gap due to collateral. So that's a great example there. And yeah, I think that talking to your banker and talking to us and just making sure everybody's sort of willing to be on the same page and work together is going to be important in that.
I think the point in that is that this isn't free capital at a 1% interest rate for everybody who wants to go out and buy a machine. This is for, like you said, it piggybacks off of another program that you've been running for a while where you're trying to do job creation. No job creation requirements, but that's still the intent of this, is that there's a gap in financing. And if we can fill the gap as a state, we can help our state in places where other people that have the capital don't come and get this as free capital. Someone did ask something about the automation loan. Do you see that question? It says for the automation loan, we did one last year.
Whether there's an ability to go backwards and do loans retroactively. There is not for any SSBCI money. We would not be able to meet that cause and result of private financing under those circumstances. So it would have to be for a new project moving forward. And generally, sort of figuring out where you're going to need to be earlier rather than later is usually better. That's also, if you're ever working on Minnesota Investment Fund, what I'd recommend for that as well.
Somebody also asked the question about SSBCI being technical assistance program. Let's hold that question till the end. I want to end on that. I want to confuse lending with technical assistance. So I will definitely answer that question, but let's skip that one for now. So we can open up to the floor. Does anybody have any questions? I have one more question or one more example for you, Drew, but I'll open up the floor and just see who else has questions for you. Hearing none for now, I'll throw my question at you. Let me go back up to this necessarily loan guarantee program, and it's going to be kind of the same question I asked you about the loan automation. So I'm a company, I'm an employee-owned company. We've outgrown our building. We found some land right next door to us. It's about a $2.7 million purchase price. We'd like to, we know we can open that up, make a bigger building. We know it can grow our company. We can create new employee owners. It's 2.7 million. I don't know what I can get from my bank right now. I mean, we have a good relationship with our bank. Tell me more about what I do on this and where that falls in. Again, I'm guessing it's gap financing. There's got to be some proof, or is there no necessary? Is it different than that automation?
Well, this is, so again, with the guarantee, there are specific banks that are enrolled in this program, and those are the ones that can access the guarantees from it. It's not technically gap financing because it's a guarantee. So really it's more filling a gap in the bank's perspective on the credit itself. And so again, using that loan to value ratio, let's say the bank has a set number that they use for that, and you're just like a little bit below it. They might say, well, conditional upon getting this guarantee, we're comfortable approving that credit. So that's where this one's going to come in.
So the bank is just not quite comfortable, because right now, if you're going to guarantee 80% of the loan, that means I can get maximum a loan I can get is $1 million loan with a full guarantee, but I need $3 million to do this loan for the land to purchase, build the building.
Well,
They just don't have enough they're not comfortable enough with me yet to give me that loan unless there's some sort of, like you said, conditional on the guarantee, right?
Yeah, and to be clear, it's not that the bank can only make $1 million loan.
Sure.
It's that we will only guarantee up to the 800,000.
Right.
So it's possible that in that scenario, they would be making a 300 or a $3 million loan to the business, but the $800,000 guarantee would be enough of a backstop for them to get that across the finish line for approving the credit.
Okay. And that's why I brought that up, is I think I've heard two things about SSBCI that I want to make sure people know. And I said it, the first one I said was, this is not just a SETI-owned business program. It's not just a program for 10, businesses that are 10 employees or smaller. That's the focus of a lot of the programs and some set-asides, and it's wonderful that that's there, but that's not, number one, that's a myth of this. The second one was, when I look at this and I say, oh, well, if it's 80% guarantee, this really only gives me, I need more than $1 million. This program doesn't work for me. That's the main one I want people to realize, is that the guarantees, the loan participation, all of that, this is private financing that provides much bigger loans. It's just that the part that the state participates in is at certain levels.
Yeah, and I would say that one of the things that's probably an important distinction between the guarantee program and the small business participation program is going to be that I would not expect that larger loans are probably happening out of the participation program. And that has to do with the lending policies of the types of organizations that are going to end up enrolled as lenders. It's fairly common for CDFIs to come in as gap financing on a larger project. So if you are doing real estate's a bad example, because typically you're going to be qualifying for a 504 under that. But if which is another thing I should have mentioned, because this is federal money, there are restrictions on SBA and USDA guaranteed programs for this. So we can't be in for the same loan purpose as a 7A or a 504, things like that. So it has to be traditional lending, and the banks that are participating in these know that. So they'll be looking at what their options are more than you need to be looking at what their options are. So, it's not uncommon if the bank is only willing to do, say, 2.5 million on your $3 million project, you're going to have some equity in that. And then they'll, one of these CDFIs might come in to do like the remaining $100,000 gap or something like that. And so that piece would be where we could use this program. And it's basically allowing them to spread that capital more, do more of that gap financing sort of thing, do more small loans to businesses that are just looking at working capital, things like that.
Okay. Thanks for the clarification. I think those are some of the questions and things I've taught as I've gone across the country and done some of these in other states and talked at the national level. Some of the questions that came up was, I just don't think this is something I can use. And I want to encourage people to think about this. Think about, you probably all have a good relationship with your lender, and whether or not they're participating in this as an authorized lender, who knows when that list comes out. But you're adding, I think you said on the loan guarantee, you're adding more and more. You're going to add a new list here soon.
We are. I think we have about 10 lender enrollment applications pending. So I would expect that it will be at least 40. It would be my expectation. But we're not closing the enrollment for that. So it's possible that as additional banks want to enroll, they'll be able to do that.
Good. We have a raised hand from Lois.
Yes, I am just curious. Drew, if you have, or if you might consider developing a graphic that would capture 504 and 7A and Minnesota Loan Guarantee and the small business participation to break out, in essence, the words that you just shared in this very last conversation, as how all of these are in existence, and this is how they interact. They cannot double up, but a 1 to 2 page set of slides that define those, I think could be helpful for businesses, because it can start to swim in a person's mind as you are dealing with the acronyms and the requirements for each. Not really looking for an incredibly complicated graphic, but just something that captures your response in this last conversation that you and Steve are having here. And Steve, your words also. Is that in the works? Does it exist?
Well, I guess one of the things that I would emphasize to businesses is that they should, if you're working with a banker that has your best interests in mind, they are going to be familiar with these programs and are going to direct you to the correct one for your business needs. I don't really know whether folks generally shop for a 7A versus a 504. They typically have different loan purposes.
Yes.
Yeah, so I don't have that, in part because I don't have enough of SBA's SOPs in my mind to say something intelligent about SBA or USDA guarantee programs. Yeah,
I understand everything you're saying. And where my head was going is, you will have 40 banks, most likely, as you referenced. And I am assuming that the many branch location banks are coming into that statement as one item. And so an awfully lot of bank coverage will be in place across Minnesota. And, translation of that is, let's take the nationally known name of Wells Fargo. If Wells Fargo is there on your list, hypothetically, that would be all of the Wells Fargos across Minnesota. Is that accurate?
We are having them specify which branches they're applying for when they apply. So there are some banks that are just having a branch that they're doing these guarantees out of. I would not expect a bank like a Wells Fargo to be involved in this program. A lot of the heavier users probably are going to be community banks and banks that are not preferred lenders with SBA. The SBA preferred lenders already have a pretty good tool, and this closely enough mirrors the 7A program that if they can process that paperwork quickly and it fits within that 7A program, they're going to use that. There are some 7A lenders that are in this program because they have identified some gaps that are not covered by that program, but generally speaking, we're not trying to compete with that, and we're expecting heavier use from banks that have 1 to 3 branches and are really community focused, which I know are a lot of the banks that work with manufacturers, particularly in greater Minnesota. So I would not expect to ever see a Wells Fargo or a US bank in this guarantee program.
Thank you, that's helpful. And part of why I was asking about the graphic is if one has contacts with the Center for Employee Ownership and you're learning about this, or you're going to other meetings and you're learning about this, and you have a cliffhanging understanding of what you're learning, it could be helpful to have the graphic, and then, or a graphic of some kind. And because if you go into your bank, which may not have as of yet become one of your 40, it would be nice to have a piece of paper that says, I've heard about this. It sounds really good. I think it could work. Here's an outline that I didn't prepare, that somebody else prepared, that talks about it. And I'd really love it if you, banker, would take a look at getting enrolled in this, because I'd like to use it. That's the mental scenario that I was after, as to why an end user could want to understand the structure graphically a little bit.
Well, we are
And
more
what
than
I can-
happy if you have a bank that you're working with that's not enrolled in this program, for you to tell them that it's an option and to come enroll. Particularly for regulated lenders, it's not a particularly onerous process to enroll. So yeah.
I will definitely share these slides with all the attendees afterwards. And if nothing else, we can, there's the programs here, you can show them. So I'm going to jump over to, thanks for the question, Lois. I'm going to jump over to the question before we shut down here. I'll give one more opportunity for people to raise their hand, but I want to touch base on the question for that Cooperative Development Services asked. Well, SSBCI is being formed. There was discussion about funding being used to provide technical assistance to support employee ownership conversions. I understand that each state creates its own program. Where does the TA conversion end up with SSBCI? I'll talk about it just at the national level, and Drew, you can touch about it in Minnesota. From a national standpoint, you are correct. There is a set aside, a different pool of money than what Drew's talking about. Each state has an allocation that they can apply for technical assistance related to applying for these loans. So it's been very clear from the Treasury Department that any technical assistance grants, and these are grants that the state of Minnesota can make, any technical assistance that grants they're making are to help someone apply for an SSBCI loan. And that includes someone applying for an employee ownership conversion, or someone just applying to get a loan. What is unclear still at this point is right now the only thing that it can be used for is legal services and financial services. And financial services to this date does not include a feasibility study. We haven't given up on that. And but right now it's just legal services and financial services. And I think, Drew, you and I talked that maybe Minnesota is only doing legal services, correct? So I'll let you talk about where you're at in the technical assistance side.
Well, we're waiting to hear back from Treasury about our application, but yes, the three buckets that Treasury is allowing are financial advising, legal, and accounting. So those are the possibilities for where funds could potentially be used. And the Treasury also limited these funds to being accessible by the businesses that qualify as SETI or very small businesses. So that's another thing to keep in mind, is if you're located in a CDFI investment area, that's going to be potentially the qualifier there to access that technical assistance funding.
And just to point on that CDFI investment area, if you Google CDFI investment area, I have the link. I should have put it here, grabbed it for the chat. There is a mapping tool that you can go to look at for the CDFI investment area. I was surprised when I plugged it in how many CDFI investment areas there are, even just in the Twin Cities suburbs and surrounding areas. I'm from Forest Lake and realized that I lived in a CDFI investment area. And so there's a lot more there than I thought there was. So there's a lot of businesses that would qualify for that. But again, it's for those technical assistant grants that most companies on this call probably don't need. It's those conversions that we're seeing, or probably could use those services.
And I stuck the Minnesota mapping.
Thank you very much.
Minnesota specific mapping tool in the chat.
One more opportunity. If you have a question, just jump on. Otherwise, we'll just wait for a second here. Does anybody else have a question?
This
Lois
is Lois.
has one more.
I just wanted to say, this has been a very effective webinar. Drew, your answers have been superb, and Steve, your questions and framing up of things has been very well done. Thank you.
Thanks, Lois. Appreciate it.
Thanks, Lois. I know you needed a preview of this for next month.
Oh, it runs even deeper than that, Drew. I like this program.
All right.
Thank
Well, on
you,
that
Drew.
note,
Thank you.
Steve's got that email address. If you guys think of questions later or have something that's like more specific to your business, less general. And so we've got a handful of staff covering these various programs. So it's best to use that general email that gets to the whole team.
Thank you for taking time today, Drew. We really appreciate it. And a reminder to everybody that's still on, if you do end up using SSBCI, you know what, even if you investigate it, please let us know at the Minnesota Center so we can let both Minnesota and Treasury know. I'm sure Drew would love to know, hey, I was a company, here was my situation. I went and tried to use it and I couldn't. What was the reason I couldn't, so that you can get that review of the program and make sure it's working for people. I think that's probably important. But we'd love to know if anybody also, does use this program so we can let Treasury know.
All right. Thanks
Everybody.
Steve.
Appreciate it.
everyone.
Thanks, Darren.
You're welcome.
I got to figure out how to. I got to figure out how to stop. Figure out how to stop recording.